So what we will learn in this presentation. So we all know as an option trader what is option expiration, and we need to know what is option expiration cycle and why we need to know. So there is a reason. And there are three types of options. I think all of us know what are three types of options, but there are three types of option cycles. So a lot of us don't know what those three option cycles are, and what is modified option expiry cycle. And I will give you the examples of option expiration cycle and explain to you what happens after the option expires on Friday, how the other months are added. So what's the logic? So once you know the logic, then you know which months will be added, so you can take care of your trades. And if you trade leaves, which are long-term options, I will give you example how the months are added for leaves. And by looking at the option chain, how you know on what cycle the options are being traded and what next month will be added once the current month expires. So I'm using I'm using phone right now, and my laptop is muted. So do you still hear echo, Jagdeep? No? Okay. So now let's begin. So we know options have expiration date. So all options expires on the fixed date. And usually the options expires on Friday. If it's a monthly option or weekly options, they expire on Friday and they have a fixed date. So all options expire on a certain date, and we know that. So what is option cycle? The option cycle is the pattern of months in which option contracts expire. So there is a pattern where each stock, when it's allowed to trade options, they are added to one of the three cycles. So what are those three cycles? So why we need to know option expiration cycles? Because if we don't know the option cycle, we cannot adopt proper option strategy. We cannot adjust the trade if we need to adjust the trade. For instance, we hold the long-term calls and we are selling short-term calls. If we don't know the option cycle, we are trading in the dark because we don't know which month we can sell the options. So to increase the success rate, we need to know the option expiration cycles. We know that as an option trader, there are three types of options. And there are weekly options, the monthly options, and the quarterly options. Most of the time, I trade monthly options. I don't trade weekly options due to short time period. The sword is always hanging on me if it's a weekly option. And I don't trade quarterly options. I only trade monthly options. So weekly options, not all stocks have weekly options. There are certain stocks which are highly liquid. They have weekly options, and the weekly options are listed on Thursday. So each Thursday they are listed to be expired 8 days from Thursday. So next Friday they expire. So you have basically 7 trading days. So if there's no holiday, there are 7 days for trading. So start on Thursday and expires on next Friday. That's the weekly option. The monthly option is expires on the last trading day of the third week. So the last trading day of the third week is usually Friday, unless Friday is a holiday, then the option expires on Thursday from the trading point of view. But technically, option expires on Saturday. So that's the monthly option. Now, quarterly options, last trading day of every quarter, they expire. So there are 4 quarters in a year: March, June, September, December. So the quarterly option expires on the last trading day of every quarter. Now, if you look at the option chain, you will see that each option has 4 expiration months. So if you expand the option chain, you will notice, first you will notice that there is a problem here. Just a second. The problem is the T is missing, H is missing. So I fix that. Just a second. Okay. So each option has 4 expiration months: the current month, the subsequent month, and 2 extra months. So the current month, suppose we are in August right now. So if you trade option, you will see the options are listed for month of August, month of September, and then there are 2 more months listed. These 2 months are dependent on the option cycle to which this stock is assigned. So by looking at the option chains, you will see which months they are assigned, and if you know the formula, then you will understand which cycle the stock is in. Okay, so let me explain now. So the question is which 2 extra months? There are 12 months in a year. So which 2 months are assigned to the option chain? So we know that the current month is assigned, the subsequent month, which is September, is assigned. So which 2 extra months are assigned? So the answer to the question lies in the option cycle. So if we understand option expiration cycles, we will understand which 2 extra months are assigned to the option chain. There are 3 option expiration cycles. So when stock started trading options, the Chicago Board of Option Exchange, they decided, okay, we will have 3 cycles, and they named it January cycle, February cycle, and March cycle. So they said 3 cycles. They named it January, February, March. And what they did, they randomly assigned each stock to one of these cycles: January cycle, February cycle, or March cycle. So for instance, the stock A, when it starts trading option, is assigned to January cycle. Stock B is assigned to February cycle. Stock C is assigned to March cycle. So when we say January cycle, what do we mean by that? So let's understand this. So January cycle. So by January cycle means the first month of the year is January, so it will be assigned January option. So that's the first thing. Then we will take the first month of each quarter and assign the option month to this stock. So the first month of the second quarter is April. The first month of the third quarter is July. The first month of fourth quarter is October. So for January cycle, these are the 4 months the option will be assigned: January, April, July, October. So we understand that. So January cycle is obvious. This is January, the first month of the year. And then they say, okay, first month of each quarter. So April, July, October. So in order to understand the cycle, so you have to know this. There are 3 cycles: January, February, March. January is the first month, and then we will assign the first month of each quarter. So if you memorize this formula, if you understand, if anyone asks you by showing you the option chain, hey, tell me which option chain, which option cycle this stock is in, you can tell by looking at the month, the current month where you are, and the month the option has. So January has these 4 months. Next, it's February. So February cycle. So February is the second month of the year. So February, second month of the year. May, the second month of the second quarter. August, second month of the third quarter. November, second month of the fourth quarter. So for February cycle, they said, okay, because it's a February cycle, so February is the obvious starting month, and February is the second month. We know that. So we take the second month of each subsequent quarter and assign it to the option chain. So second month of the quarter, if you close your eyes and see, okay, which one is the second month of the second quarter? Oh, it's May. And what is the second month of the third quarter? Oh, it's August. And the November is the second month of the fourth quarter. So these are the 4 months the option change, options will be assigned. Option month will be assigned to the stock, which is assigned to the February cycle. So we trying, there are 3 cycles: January cycle, February cycle, March cycle. January is the first month, so first month of each quarter. February is the second month, the second month of each quarter. And then March, because March is the third month, so the third month of each quarter. So March, the third month of the year. June, third month of the second quarter. September, third month of the third quarter. December, third month of the fourth quarter. So this is the way they assign the month to the stock, which is assigned to the cycle. So if stock A starts trading option tomorrow, they will randomly choose the cycle out of those 3, which is January, February, March. Once they decide which cycle they will assign, then by looking at this chart, you can tell what month they will assign to this stock. But there is further in 1990 when traders said that, we have a problem here, because if the traders were short-term traders and the flow traders were hedging their positions, they needed current month or subsequent month option, because the cycle can have a month way further. So March cycle, let's look at the March cycle. So if suppose let's see March cycle. So if we are in the month of, suppose we are in the month of October, right? So if we are in the month of October and the stock is assigned to the March cycle, if the stock is assigned to the March cycle and today is October, then December is the month available. There is no October, there is no December. So how do you trade short term, or how do you hedge your position short term? So that was the problem. So they said, okay, yeah, we got a problem. So we will add 2 more months besides those 4 months. So they said, okay, we will always have the current month and the subsequent month. So for instance, we are in August. So we have August, all options have August expiry and September expiry. So that's done. Once the August expires, September will start, right? So we already have September. Then October will be added if October is not there listed. So October will be listed the next trading day after expiry. So the Friday is the last day because it's expiry day. Then on Monday, when you when you open your option chain, you will see October listed if it's not listed there. So then we have 2 months, September and October. So that's the way the option cycles work. So current month and subsequent month are added. And these are the two reasons, speculation and hedging. For speculation purposes and for hedging purposes, they added the front month and the subsequent month. So now let's take some examples. I will take you through some examples where I will explain how the months are added and subtracted based on the cycle the stock is assigned to. So let's assume today is January 1st, and this particular stock is assigned a January cycle. So each cycle has 4 months, right? So January has the January month and the first quarter of the first month of the second quarter, first month of the third quarter, first month of the fourth quarter, so 4 months. But because they added 2 more months for hedging and speculation, so they said, okay, we will add 2 months, the current month and the subsequent month, and we will take 2 months from the option cycle. So that's the way we will have 4 months always available for trading. But we know which month we can add based on the option cycle, because they know that we have 4 months out of option cycle. So for instance, January is the option expiration cycle for this stock, and we have 4 months available. So they said, okay, so January is the current month, so we will list January as the current month option, and February is the next month, so we will list as February also. So because 2 days left for January expiry, we need to have a February. So there is always a next month available. And then because January, this stock is assigned to January cycle, so this stock will have April and July also listed. Because April is the first month of the second quarter and July is the first month of the third quarter. So far good. So if you look at the option chain, you will see on January, you will see in the month of January, any time in January before the expiry on Friday, you will see 4 months listed: January, February, April, and July. These 4 months will always be there. So what happened when January expires? So let's say today is Friday. I mean, the Friday was last Friday. January expires, and on Monday there is no more January, right? So they will add another month. The February will become the current month. It was a subsequent month, it will become current month. Because we always need a subsequent month, so March will be added. So tomorrow, if the option expiry was this Friday, and tomorrow Monday is the first trading day after expiry, you will see a new month added, which will be March. So again, we will have 4 months available: February, March, April, and July. April and July were already there, right? So if you go back, April and July were already there. We had January and February, but because January expired, so February became the current month, and then we take out this February and add March as the subsequent month, and we keep April and July as it is, right? So that's what happened when January expires. What happened when February expires? So when February expires, we had March. So when February expires, the March became current month. We already had April, so we make it as a subsequent month. We already had July, so first month of the third quarter. But we need 4 months. So October will be added because October is the first month of the fourth quarter. This stock's is assigned to January cycle. So the stock is assigned to January cycle. We always need 4 months. We are in the month of March because February expires. So tomorrow, Monday, we will see no more February. February is not there. We have March, which is current month. April is the subsequent month. July is the first month of the third quarter. So October will be listed. So knowing what cycle the stock is in, you would know in advance that tomorrow October will be added. So you can take appropriate steps in your strategy. So let me go back. So January, today is January 1st, option expiration cycle January, available 4 months. Available months are 4. So current month is January, February is second month, and then April and July are listed because of the January cycle. So April and July, so keep that in mind, April and July are already there. Then when January expires, we add March because there's no more January, there's a February, and April is, March needs to be subsequent month, and April and July were already there. So nothing to do with April and July. Then when February expires, because April and July were there, then comes the October from this January cycle. Okay. So let's take another example of leap. So now we know we always need 4 months, but for leap, we need additional months. So for leap, they have January expiry. Okay, by the way, if you're not part of a swing option service, you will receive the email, or I will put the link for $267 for the quarter for swing option service. The published price is $337 and it's valid till 11 a.m. So I will drop the link in the chat box in a few minutes. So that is my advertisement. Okay. So understanding option cycle for leaps. So what are leaps? Leaps are long-term equity anticipation participation security. That's the whole explanation for leap. So leaps are longer-term options, and they are only available for the most popular stocks. And they have more than 4 months option expiry, generally the month of January. So 1 year, January, like January 2018, January 2019, 20, that's the month they have for leaps, but no more than 3 years out. And the months, leap months are added in May, June, or July. So if you trade leaps, you know the leap month will be added in May, June, or July. And I will explain why, for example. So this, okay. So let's say the stock is on January cycle, and today is May of 2017. So if today is May of 2017, then based on the option cycle, we know that we will have May and June option, because May is the current month, June is the subsequent month, and July and October are the first month of third quarter and first month of the fourth quarter. So we know these 4 months will be listed. And then, because we are in year 2017, so we will have 2 more months listed for leap, which is January 2018 and January 2019. So in total, there will be 6 options months listed for this stock, which is in January cycle. And the months are May, June, July, October, and January 2018 and January 2019. So, and today is May 2017. So what happens when the month of May expires? So when the month of May expires, then June will become the current month. It was subsequent month, it will become current month. July was the first month, it will become subsequent month. October was the first month of fourth quarter, October be listed as the first month of fourth quarter. But because it's a January expiry cycle, so this January 2018, which was leap, will become a standard option. And because it's the first month of first quarter, right? So it's a January cycle. January is the first month of first quarter. So they will convert this leap into standard option 2018. Since there are 2 more months listed, so they will add another option here, 2020 for leap. So in May, when the May expires, this January cycle will have another leap option added. So if you trade leaps and you want to buy, suppose 2020, January 2020 options, like about 1.5 years from now, 2.5 years, then you know that as soon as the month of May expires, you will get 1 more year added. So you can look for this month, because this January 2018 became a standard option because May expired. June, July, October, January, always 4 months, and then 2 more months for leap. So 2019, 2020. Okay. Next, let's say this is stock. I took the example of March expiry. So this stock is on March expiry cycle. Previous stock was on January cycle. This May 2000, today is May 2017. So we will have 6 months for leap. May is the current month, June the subsequent month, right? And then September is the 3rd month of 3rd quarter. So it will be listed because of the March cycle. March is the 3rd month. And then December will be listed. December is the 3rd month of the 4th quarter. So we will have May, June, September, December. This is on March cycle. And then we will have January 2018 and 2019 as a leap option, right? So these are the 6 months listed for stock trading in May of 2017, having March cycle. But what happens when May expires? So when May expires, this June becomes the current month. July will be added. See, there's no month of July here, right? So July will be added as subsequent month. Then this September, December, January, and January 2019 will be listed as it is. So in the middle, they will add July. So if you're trading a stock somewhere here, May and June, by looking at this September and December month, you know that this stock is on the 3rd expiry cycle. And when May expires, then June will become the current month, and you know that we always have a subsequent month, so July will be added. So in advance, you know which month will be added. So this gives you an edge or better planning for your trade. Now another example. Let's say today is June and our stock is on March expiry. So we have June, July, September, and December. These are the 4 months. And January 2018 and 2019 are for leap. So these are the 6 months listed. June is the current month, July is subsequent month, September is the 3rd month, December is the 3rd month, and then January and January 19th, right? So after June expiry, what happens? Let me see just a second. Yeah, this is the link for that swing option service. I put it in the chat for $267 for 90 days in case you want to join. Okay. So after June expiry, what will happen? July, because June expires, so July will become the current month. And then August will be added because we always need a subsequent month. Current month and subsequent we always need. So as soon as June expires, we already have July. They will insert August as a subsequent month. we have September and December. They are not going anywhere. This, because we need, yeah. So this 2018, they will, because 2018 now is when in the month of June, they changed the January, because it's 6 months left, so they changed the January into a standard option. So they convert it, and then they always add another month, long-term month for leap. So you will see 7 options listed: June, July, August, September, December, January. 2018 will become a standard option. It was leap, and then they will add January to 2020. So in other words, 2 months will be added: August as a subsequent month, January 2020 as a leap month, and because we already had January 2018, they will change it to a standard option. So in the month of June, it's a little more complex. So in summary, we always have current month, we always have subsequent month, and we always have 2 more months. These 2 months depend on what option cycle the stock is in. So the option cycles are 3: January cycle, February cycle, and March cycle. So how can you tell what cycle a stock is on? So if you're looking at the option chain and you want to know what cycle the stock is on, then you cannot tell by looking at the front 2 months, because every stock has the front 2 months. Right now it's August and September. All the stocks have, if they are having options, they all have August and September options. When August expires, those options which do not have October, they will have October added into it, because September will be the current month, and then they will have October as the subsequent month. So that's, you cannot tell by looking at the current month and the subsequent month which cycle. So you have to go beyond the second month. So the third month, you have to look at the third month. So for instance, December, if you see December as a third month, then you say, okay, December is the third month, so it is on, because December is the third month of the 4th quarter, so this option is on March cycle. If you see November as a third month, then you know, okay, this is on February cycle. If you see October, then you know it is on January cycle. So this is the way you can tell right now on what cycle the stock is in. Exception is the January, because January is there because of leap. So if January is the leap, this stock can have a leap. So you have to go, if you see January, then you look for the 4th month. Then you decide what option cycle the stock is on. So usually you can tell by looking at the 3rd month. If the 3rd month happens to be January, then look beyond the 3rd month, look for the 4th month, and then decide which option cycle the stock is on. So in this presentation, you learn what is option expiration. We know option expires at a certain date. We know what is option expiration cycle. There are 3 cycles: January, February, and March. Why we need to know option expiration cycle? Because then we can plan our trade. We can take appropriate strategies. We are not trading in the dark. We know which month is coming, which month will be added, etc. We know 3 types of options: weekly option, monthly option, quarterly options. We know 3 types of option cycles: January cycle, February cycle, March cycle. We know based on the cycle what 4 months are there. We know what is modified option expiry cycle and why it's added. The modified expiry cycle is the current month and subsequent month are added, and because of speculation and hedging purposes. We gave you examples of option expiration cycle, explained to you January cycle and what happens when January expires, what happens when February expires, how the new months are added, and what's the logic. We also explained to you the cycle for leaps. So leaps have a January option listed, no more than 3 years, and the leap month gets converted into standard options in the month of May, June and July. So these are the 3 months where leaps months are converted into standard options and new months are added. And finally, how can you tell what cycle a stock is on? You can tell by looking at the 3rd month. Don't look at the 1st month and 2nd month, because every stock has the option listed for the front month and the subsequent month. So you have to look beyond the 1st and 2nd month, which is the 3rd month. So like December, you know it's a March cycle. If it's November, you know it's February cycle. But if the 3rd month is listed as a January, then it could be a leap because of the leap. So you need to look beyond the 3rd month, which is the 4th month, and then decide what cycle the stock is on. And by knowing all the option expiration cycle, it gives you a better idea and trading and knowing that, okay, this month will be added. So for instance, August is expiring next week. September is there. If October is listed, then October will not be added. There will be another month added. If October is not there, then you know October will be inserted in next trading day after option expiry. So this is it. I also have option expiry, stocks and option trading course, Mastering the Markets. And if you're interested, you can book a strategy session which goes for 40 minutes, where I explain what it is about. You can send me an email at noshi@financialmarketswizard.com, and I will explain to you about this coaching program, the cost and the benefits and the features. And it's starting soon. So if you're interested, you can send me an email and we can book a strategy session for 40 minutes. So thank you. So this is it. Next webinar will be on Sunday, and I will send you the topic of the next webinar. Thank you.